bankers are not our friends. The first thing to realize about bank is that they are out there to make money, like any other business. While they may claim to favor you for being a loyal customer or creditworthy client, however, you are just one client among millions of others. They cannot really treat you different just because you keep a healthy bank account or you pay your bill on time. There are many stories behind the banks, many truths behind the myths, and many secrets they don't want you to know. Hello guys, I'm Melisandra. In today's video, based on my research, we will discuss the facts that banks don't want you to know. 1. Decreasing value of your money. Let's ask a question here. How much is the interest you earn when you deposit your money in a savings account? While we know the savings rates could change overnight, and they are different in different times, but most likely the rates of both traditional and online bankings give not more than 2% interest rate. You probably think banks are the best place to keep your money, FDIC insured, and you get 2% interest rate every year. Your money is safe, and eventually the number will get bigger year after year. However, the fact is not what it looks like. Most cases, you are losing your money. How could that be? It's not your money will be stolen, but it has something to do with inflation. The average inflation in the US is around 2.5%. 2.5% inflation and 2% interest. In this case, your money is barely remains the same value. However, we have the inflation that hits 9.1% in June 2022, which was the highest level since 2008. As of right now, the inflation rate forecast at 8.5%. Think about it. Your bank interest rate is 2%. The inflation rate is 8.5%. The intrinsic value of your wealth is literally decreasing 5.5% every single year. The purchase power of your money is going to be far less a few years later than it is right now, especially the inflation rate is skyrocketing currently. There are other opportunities to invest and benefit from inflation rather than park your money in the bank. However, some people might think the higher the returns are, the bigger the risks are. For people who don't want to take any risks, I guess bank isn't a bad idea. 2. It is possible to make money by borrowing money. We discussed how rich people make money with debt in the previous video. The same theory can be found here. Tesla, SpaceX, and other companies were founded by Elon Musk. Musk is the richest person in the world with a net worth of over $200 billion. Although Musk clearly has plenty of money to buy a home outright, he has chosen not to do so. According to reports, Musk took out mortgages on several properties in Bel Air and the Bay Area for a total of $61 million in 2018. Other wealthy people, including Warren Buffett, also borrowed to purchase their properties for the same reasons Musk did. As a result, they avoid tying up assets and maintain liquidity so they can invest their money in other ways that generate greater returns. The interest rates on mortgage loans are usually very low. Despite borrowing a fortune, Musk's financing charges will be extremely affordable in comparison to the amount he borrowed. Generally speaking, mortgage rates are well below 5% even when borrowing large amounts, and you'd only benefit from avoiding this type of loan if you saved on interest. Then Musk would be better off borrowing for a home and putting his money elsewhere if he knows he'll make more on his money than by avoiding interest. Furthermore, he would be able to have a deduction on his tax because of the mortgage. 3. Make sure you check your account statements on a regular basis. It is important to remember that banks are not perfect, they are not our friends, and they can make mistakes occasionally too. Reviewing the fees you pay could save you a lot of money. Checking your account statements can help you identify ways to save on fees, particularly if you are paying excessive savings transaction fees. The simple act of pressing credit instead of savings on Visa debit when purchasing items where no cash is taken out can save you significantly over the course of a year. You could, for example, be victimized by an identity thief who obtains your debit card number and makes a test purchase hoping that you won't notice. Your account could then be used to make larger purchases if the purchase goes through. Things that are excessive or hidden should be avoided. Overdraft fees and returned payment fees can drain your account balance, so monitoring your checking account can help you avoid them. It pays to keep track of your banking activity to prevent being hit with an overdraft fee, which can average around $34 according to the Consumer Financial Financial Protection Bureau. Besides overdraft fees, other banking fees to be aware of include ATM fees, monthly maintenance fees, fees for minimum balances, paper statement fees, balance inquiry fees. 4 transactions made with your card are profitable for banks. Merchant banks and card issuers typically communicate through credit card processors rather than directly. As a result, they ensure that each transaction is processed securely and notify the card network about it. Every time you swipe your card, the banks make money through processing fees. Credit card processors make money similarly to networks through a percentage of each transaction made between a cardholder and a merchant. In this case, you would not see a difference since you are debited for the actual purchase. The merchant will pay the fees, and usually the merchant will add the fees to the price of the item since they want to maximize their profit. If you buy something for $600 and the bank charges 3%, that $18 would go to the bank. If the bank takes the merchant's profit, the merchant won't be happy unless customers pay more to cover the difference. As a result, they would raise the retail price, which was supposed to be $580 to around $600 in order to cover the processing fees. 5. Monitoring of your transactions is in progress. Bank accounts are not monitored by the Internal Revenue Service. There are, however, certain circumstances under which the IRS can easily access your bank account information. When required by the IRS, you must disclose your bank account information honestly and accurately. Your bank reports the account to the IRS when more than $10,000 in transfers are reported in a given year. According to the U.S. Treasury, wage and salary deposits won't count toward that threshold. In the event these transactions occurred, their audit would come up. They would want to know if you paid tax on the funds, if the transaction was conducted legally. Your bank accounts may be costing you interest and fees over the course of your life if you do not understand how they work. Ask questions, do your research, and make sure you understand all the details of the account before you sign up. Banks are always trying to milk you for as much money as they can, whether you are spending or saving. You should always watch it. Aside from the 5 addressed facts above, they may reorder your purchases or run your deposit last. Okay guys, thanks for watching. Subscribe to my channel for more future updates. I will see you soon.